Good afternoon. Welcome to Midcap Radar live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me is Vivek Iyer. Well, we saw that sharp fall from the highs. We were down around 90 points at a point in time. But there's some recovery which we are seeing right now. But we'll have to see whether that sustains or not.
That's right. So it's a very muted start as far as the August series is concerned. We actually saw quite a bit of a sell-off. But in the last half hour, what markets are attempting to do is to manage or attempt a very slight recovery. What is it that is leading the recovery? Well, some of the PSU banking stocks, they are doing quite well. Indian Bank, that particular stock near the day's highest point. Some capital market players, they are doing quite well. But we have a lot lined up on the show. So let's start off with the top headlines. Stocks trade soft, but ranged after Trump imposes 25% tariff on India, higher than most trading peers. Healthcare and pharma are the big drags, while FMCG ekes out gains. Midcaps under pressure.
Girish Kousgi, the managing director of PNB Housing Finance, quits much ahead of his term ends. Worries over the lender meeting its set targets spooks the stock following key exits. PNB says his resignation is only due to family commitments.
Nifty Pharma index under pressure after US President Trump sends letters to 17 global pharma companies to equalize prices of US branded drugs with other regulated markets. Aurobindo Pharma, Granules and Glenmark down over 3% amid profit booking.
Netweb Technologies up nearly 9% after strong revenue growth in Q1. AI workstations saw 300% YY growth. Management tells CNBC-TV18 that they have increased the AI contribution guidance to 22% versus 20%. They will also continue with the 40% growth level.
Radico Khaitan shares surge over 5% after it sees a strong Q1 with volume growth of over 37%. The management tells CNBC-TV18 that they expect the prestige and above volume growth at 15% in the next 3 years.
Those are the top headlines that we are tracking, but a lot of action which is happening in the mid-cap space as well. So let's go across to Hormuz. He's joining us with the mid-cap movers that we have today. Hormuz.
It's an interesting day for the broader markets, and it's turning out to be yet another down week, of course, make no mistake about that. We start off with some of the movers then from the broader markets on the gaining side, though, some that are bucking the trend. You take a look at Hester Biosciences, that stock is up around 18% now. This is a very sharp spike that it saw. Nelcast continues to move higher. We spoke about it yesterday as well. And matrimony.com has moved down on the list of gainers, now 8% higher on that stock. Earnings are coming in thick and fast, awaiting more results later in the day. But IIFL Finance was down yesterday, extending its losses now. Niva Bupa 2, a result reaction, down 6.5%. And GSK Pharma came out with numbers a few minutes back. That stock too is down 5.5%. Among the newsmakers of the day, of course, can't not talk about PNB Housing. The casualty of the day, 17.5% lower. Suzlon, first day as an F&O stock, 7% higher here. And Vari Energies too, seeing good gains today, 4.5%. A segment that has been sulking through the day is pharma, and most of the stocks on the Nifty Pharma Index trading with losses at the lowest point of the day, be it Aurobindo, be it Gland, be it Strides, all of them seeing losses of anywhere between 3 to 6%. And lastly, some of the other movers in the mid-cap space on the losing end, Credo Brands as an earnings reaction here, 20% lower circuit for the stock. KPR Mills, of course, the textile names continue to bleed today as well, 6% lower here, and ASK Automotive too at the lowest point of the day. Back to you guys.
Thank you so much, Hormaz, for taking us through all of the movers as far as the broader end of the markets are concerned. Before we slip into a short break, here's a reminder for our viewers. You can unlock a world of exclusivity, expertise, and influence. Become a member of CNBC-TV18 Access, our prime members-only experience on CNBC-TV18.com. The membership includes access to CNBC-TV18's flagship events, interactions with our journalists, along with curated studio tours, e-learning sessions, and master classes, and curated lifestyle benefits.
Welcome back. You're still tuned into Midcap Radar. LG Balakrishnan, that's the first management on the show, reported a subdued set of Q1 numbers. Exports continue to be a concern. We are now joined by B. Vijay Kumar, who is the chairman and MD at the company. Mr. Vijay Kumar, good afternoon. Thank you so much for joining in. Well, Q1 earnings have been muted versus what was expected in general as well. Profits are up just 3%. Margins have declined on a YOY basis. But you have managed to achieve targeted revenue growth. And for FY26, you are targeting a growth between 10 to 14%, and in Q1 the growth is around 15%. Are you on track to achieve the levels that you had indicated earlier? And there's so much happening in the exports market currently. What's your take on that one?
The Trump taxation is new, so that opens up a whole new area. So the export is going to, I feel the export will be subdued for a lot of companies, and we will also be part of it.
Understood that. Mr. Vijay Kumar, at the end of the last quarter, clearly there was a worry, especially in terms of the industrial chains business, especially when it comes to the export market. So what is the kind of slowdown that you witnessed over there? Q2, H2, do you expect any kind of incremental improvement as far as the demand environment is concerned?
In Q2, one of our major markets was the US. We were targeting the US for our industrial chains.
Right.
So that will be a little slow, but it is not going to hamper our overall performance.
What is your exposure to the US markets, Mr. Vijay Kumar?
Our US market is currently about 100 crores.
About 100 crores.
100 crores.
Okay. And is there any indication as to what will happen to those exports currently? It's 25% tariffs that has been announced. Have you had a word with your consumers, your customers, because it has just happened?
There is a lot of confusion, so nobody really knows what is going to happen. My gut feeling, we will probably stabilize around 10%. So we have to wait and see what will happen.
Okay, so you're hoping that it settles around 10%. Any initial assessment, number one, will you absorb part of the hit or will you be passing it on to the customers? Any kind of assessment that you've done? And the second part of the question, sir, are you holding on to your revenue growth target of 10 to 14% as far as FY26 is concerned, or will you trim that lower?
No, I will answer the second part first. We are holding on to the 10 to 15% growth. 10% definitely. And depending on the stabilization of the export markets, maybe we could go a little higher. But the first part of your question,
in terms of the assessment, will you absorb or will you pass it on, sir?
No, we don't know yet.
Okay.
If we can absorb on a long term, then obviously the buyers are not doing their job properly. We can't have a margin of 25%. So it's not possible to absorb 25%. That's why I feel that anyway it has to come down to about 10%. Even that will have to probably be shared. So this is why I said in the last quarter itself that our net profitability may take a little bit of a hit.
Got it. Mr. Vijay Kumar, I wanted to generally understand what kind of capex plans do you have for FY26? What was the contribution from new generations facility that you saw in FY25? Some market share improvement, will that be the outcome of any additional capacity?
We are looking for not additional capacity, we are looking for other products that we can get into and other markets that we can get into. We are studying the possibility of getting into some operations in Vietnam or Cambodia. So all this is going to take a little time. But we also have plans through our subsidiary to put up an operation in Mexico. So whether that will help us overcome the tariff barriers also, we have to study.
Understood that, sir. Quite a lot of uncertainty is what you are looking at currently. Sir, in another structural question, in terms of content per vehicle, you quite good when it comes to the ICE segment. Now, when it comes to the EV part of the business, has the scale-up been according to what you had initially envisaged, or is it slower than expected? And going forward, what will be the revenue mix like?
It's been slower than what I expected, so I really can't answer that question. Unless the EV pickup is there, we are only a supplier. We are not manufacturer of the full product. So we have to wait and see.
Okay, it is a developing situation, so we'll get a lot more answers in quarters to come. Thank you so much, Mr. Vijay Kumar, for joining us and being candid about the outlook, especially on the export markets. They have 100 crore sales coming in from the US, and they expect it to slow down or see some slowdown in quarter two itself. With that, we'll slip into a break, but remember to tune into the all-new CNBC TV18 Prime, bringing you insights from policymakers, business leaders, and economists shaping both the world and India's future. CNBC TV18 Prime decodes global shifts and their impact on Indian businesses, giving you unparalleled insights. Tune into CNBC TV18 Prime at 12 noon for the Global Reset, at 1 p.m. for the Big C, and Global Lens at 8:30 p.m.
Welcome back to Midcap Radar. Well, the next company on our radar is Invenress Knowledge Solutions. It reported a stable set of Q1 numbers. The company reported a stable revenue growth and margins improved on a year-on-year basis as well. We are now joined by Nithya Balasubramanian, who is the CFO at Invenress Knowledge Solutions. Thank you so much, Nithya, for joining us. Well, what the first question is, revenue growth for the company has essentially been in the range of 15 to 16% in the last 3 quarters. Will that sustain going forward, FY26? Can you quantify the guidance as far as the 3 main parameters are concerned? And what are the incremental growth drivers for you?
Thank you for having me. We're obviously pleased to report another strong quarter and strong set of results. I think we've always maintained that not just in the next quarter, not just the next year, but over the next 5 to 7 years, we would want to continue to grow faster than market. Our market is, the outsourced market in the US is about $34-35 billion, which is expanding at about 12%. And we want to be able to consistently beat that market growth so that on an ongoing basis, we continue to gain market share. So along those lines, therefore, this quarter as well, we've reported a 16% growth in revenues. And of course, a much higher growth rate in terms of EBITDA. Our margins came in at 32%, which represents a 36% year-on-year growth. The margin expansion is also reflective of the business transformation that we've achieved in the equity asset that we had acquired a couple of years ago.
Nithya, you're talking about this growth to continue over a couple of years that would come by, and your top 5 customers, that's where the revenue has been increasing, the share has been increasing as well. Can you give us a sense of, is it particular to a certain geography that you're seeing that kind of growth? Is it particular segment? If you can throw light on what kind of percentage share will you get from top 5 customers down the line?
So the growth is actually being quite, it's actually across the board, right? So one, in terms of geography, our focus is entirely in the US market. So all the growth that you're seeing is actually coming from the US market. But within the market, if you look at different market segments, I think our growth has been fairly secular across the various segments as well as the different features of the platform that we offer. We have seen growth from new customers and new new deal wins. We've also seen growth from our platform customers continuing to scale up. And we've also seen our land and expand strategy with our existing older customers also play out. So it's a healthy mix across the board, and therefore we believe it's sustainable going forward as well.
Got that. Nitya, the other question is, as far as a couple of your top clients are concerned, quite a bit of transition going in over there. Number one is Palomar, there could be a change of control over there. The second one is United Health. Remember last time we had you on the show, we spoke about United Health and the troubles that they were facing. Now, given that churn, do you continue to stay confident of growth as far as these particular clientele is concerned?
No, absolutely. I think both of these are very important customers for us and growing customers for us. Palomar, if you will remember, was our first customer for our entire platform. So they've bought all 16 features of our platform from the get-go, and it's a very long-term, 15-year deal, in fact. So our relationship with them continues to grow, and we continue to get to 100% implementation of all 16 features of our platform. And in fact, more recently, I think what's been in the news is that they're in conversation with UC San Diego, which is obviously one of the largest health systems in the US, about a potential partnership. So we believe that that signals to us continued health of Palomar, the Palomar health system. And of course, we are cautiously optimistic about the opportunity that brings to us as well in the future.
Okay, you briefly mentioned, how the asset equity has been performing. Going forward, what is the kind of ambitions that you have over there? And Nitya, a quick word on how the entire emerging tariff situation, could impact the pharma market in the US. And do you see any spend impact as far as your own prospects are concerned?
So your first question was on equity and what we hope to see in the future, right?
Right.
So I think for the large part, there were two very important reasons why we bought equity. One is, of course, the margin transformation that we could achieve through a deployment of IKS's technology, as well as getting the right balance of the onshore-offshore mix. I'm very happy to report that a large part of that transformation has already played out, which is what is reflected in the very healthy margins that we've posted. The second big vector why we acquired equity was actually the cross-sell opportunity. Again, very happy to report that we have started seeing green shoots. In fact, last quarter as well, we had mentioned that there are 4 cross-sell wins that we have now been able to bank. And this quarter as well, we had reported expansion of a relationship with a top health system, which also is a cross-sell win for us. So going forward, you will start to see a ramp up of these deals that are now in the mix. And of course, we believe that there is more to come in the future. So that's with respect to equity. And to your question on tariffs, thankfully, I think the services, technology and services is outside the purview. We do not see any meaningful impact, therefore, based on the recent tariff conversations and the ongoing negotiations.
Take that point, Nitya. Thank you so much for joining us with your thoughts and outlook on companies' plans and growth going forward. That's the word coming in from IKS. So with that, we'll do one thing. We will take your leave on this edition of Midcap Radar. Stay tuned, your stocks when we return.